Good morning, everyone. I am Abhay Tibrewal, a PGDM finance student, and in this presentation, I will be explaining the advantages of the individual lending in microfinance. Individual lending has emerged as an important evaluation in rural and the microfinance, especially as a borrowers graduates from a traditional group lending system. This model reflects the growing maturity of a microfinance clients and the increasing need for business-oriented financing solution. In this session, we will understand its concept, advantages for the borrowers, benefits for MFIs, and its strategic importance in the modern and financial ecosystem. Let's understand the individual lending model. The individual lending models refers to a microfinance approach where the loans are provided directly to an individual borrowers without any joint liability or a group guarantees. Unlike group lending where repayment responsibility is shared amongst members, individual lending places complete repayment responsibility on the borrowers. The credit assessment in this model is primarily cash flow based. MFIs evaluate business income, stability of enterprises, household income, and the repayment history rather than depending on the formal balance sheet. Loan size under the model are generally higher compared to the group loans, and the repayment schedules are more flexible, often structured monthly or fortnightly. This model is particularly suitable for mature clients who have successfully operated under the group lending and now require a larger capital to expand their businesses. Now, advantages for borrowers. From borrowers' perspective, the individual lending models offer several significant advantages. Firstly, borrowers gains access to higher loan amounts where enables the business expansions, assets purchases and scaling of a operation. This is especially beneficial for established micro entrepreneurs who requires larger working capitals. Secondly, the model eliminates the social pressure. In the group lending, peers pressures ensures repayment, but it can also create stress. Individual lending removes this burden, allowing borrowers to operate independently. Another major advantage is flexibility in the repayment structure. Since the repayment schedule can be aligned with the business cash flows, borrowers can manage the installment more efficiently. Additionally, financial privacy is maintained because there is a no involvement of a group members. The loan is strictly between the borrowers and the institutions. Overall, these models enhance entrepreneurial growth, financial independence, and the long-term business sustainability. Next slide is on advantages for microfinance institutions. From the institutional perspective, individual lending also provides strategic benefits. One key advantage is in the higher interest income as a loan ticket size are larger compared to the group lending. This improves the revenue generation for MFIs. Secondly, it allows the product diversification. Institutions can expand beyond traditional group based microcredit and offer a tailored financial solution. Another important advantage is urban and the semi-urban market expansions. Individual lending is a more suitable for a structured business environment where borrowers operate independently. Moreover, a direct engagement with the borrowers helps in building the stronger client relationship and improves the client retentions. It also supports the concept of a client graduations where successful group borrowers transitions to the larger individual loans instead of a shifting to the commercial banks. Thus, these models strengthen the portfolio's quality and the long-term profitability. This is about strategic importance and the conclusion. Strategically, the individual's lending models represent the evaluation of a microfinance from a social collaterals based lending to the business oriented financings. It complements the group lending models rather than replacing it. While group lending is the ideal for a first time borrowers, individual lending supports mature entrepreneurs who requires a larger capital. However, this model also demands stronger risk management, detailed credit assessment, and intensive monitoring as the risk is borne individually rather than the socially. In conclusion, the individual lending model is the borrower centric, growth oriented approach that balances the higher opportunities with the higher risk. It plays a crucial role in supporting enterprises, scaling, and the financial inclusion in modern microfinance system. Thank you for watching this video.